And it's 1:30. We have updates from the world of business for you. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John McQuarrie. Here's what's coming up on the program today. It's a rev up for Egypt's auto industry. A special fund has been created to boost activity there. And global central banks turning more to gold at this stage. A surge in the purchase of gold by central banks. And those who are into illegal money circulation in Ethiopia get caught. 3,000 of them. Good afternoon, Nan. We'll go straight into the market here on Business Incorporated, starting from what's going on at market back here in Africa. Let's see the numbers right there. We can tell you that the NGX had a negative sentiment at intraday. Beg your pardon, had a positive recovered, I see 0.07% in the green at 65,336.80. The flip side is what we have for South Africa, 0.6% down at 76,552.88. We look at other parts there now. Egypt is also in the red, 0.09%, 17,823.80. Kenya closed Monday marginally in the red, 0.02%, 106.15. We'll go to the Middle East there and see that it's mixed sentiment for that market. If we could have the numbers right there on the screen. Yes, Abu Dhabi is positive, 1.54%, 9,975.53. Dubai is on the flip side, 0.11%. Right there, 4,075 there. Saudi Arabia is also in the green, 0.39%, and Qatar is more than 1% negative at intraday. Let's go to London now and see what's happening there. We spoke to Teniola in the morning. We'll speak to her again this afternoon. Teniola, good afternoon. Good to have you. Well, this comments of the HSBC executive that UK is weak over China still topping conversations even after his apology. How important is this comment of his?
Ini, definitely an interesting one. As we know, the HSBC is Europe's largest bank, but it also makes a large share of its profits in Asian market. So it has frequently, found itself caught up in the increasingly tense relationship between Western and Asian markets, trying to please both sides. The latest dispute is that comment from Copa Coles. He basically said, and it was during a private meeting, that the UK caved to US pressure over doing business with China, criticizing both countries over their approaches to the world's second largest economy. He cited the UK's decision to ban Huawei from its 5G network and as an example of giving in to US demands and not taking its own approach, for instance. Well, this has caused a huge uproar in London, with UK lawmakers citing China's human rights record and calling him an apologist. And as you said, he has now apologized somewhat, emphasizing that the comments were his personal views. But it's a difficult situation for the company as it tries to, please both sides, both parties, while, stuck in the bigger political tensions and tit-for-tat measures between the West and China. So I'm sure we'll definitely see more of, like this in the future, Ini.
I mean, it's just an expression, but it goes deep, runs very deep, and he's having to face the consequences of that. Now, let's look at the market. How's it looking at intraday? We see back here in Nigeria the recovery of the NGX being sustained. How is it over there in London?
Well, not so bright. The FTSE All-Share Index is down by 0.47% at intraday, hurt by declines in the mining sector and weaker than expected trade data from China, and also what we discussed earlier today with less people buying in July. The FTSE 100 is down 0.59%, while the domestic market, the FTSE 250, is slightly up 0.02%. In the currencies market, the British pound is struggling struggling today, but it has held above last week's 1 month low. It's trading down 0.47% against the US dollar. It's also trading down slightly against the euro by 0.04%, but it is trading up against the Japanese yen by 0.03% at intraday, Ini.
All right, thank you so much, Tanila, for that update from the UK. So from the UK, let's move over to Europe now. Germany is looking to accelerate investment in a climate-neutral economy with new federal aid program aimed at what they call transformation technologies. But I guess we'll know more about this now as Cassandra joins us from Berlin. Hi, Cassandra. Good afternoon. So we really need to know about this transformational technology. What can you tell us about this plan?
Thanks for having me. The program is going to be delivered in the form of grants and tax benefits directly to companies and could be worth a total amount of 150 million euros per company. It was announced by the German economy minister, Robert Habeck, a leading member of the German Green Party. Now, under the scheme, both the federal and state governments will be allowed to fund so-called transformation technologies. That means the production of batteries, solar panels, wind turbines, heat pumps, and even equipment for carbon capture and storage. Part of the idea of the plan is to hopefully accelerate projects through at least one layer of bureaucracy. The ministry says that support programs from the federal or state governments that meet these regulation requirements would not have to notify the European Commission under state aid law. Habeck has repeatedly criticized the fact that decisions at the EU level have taken too long.
And the German economy minister is stressing the importance of sovereignty. How does the government intend to implement this?
Well, I think some of that could be an allusion to Habeck's frustration with the EU approvals process, but I also think a lot of it has to do with the Russian war in Ukraine. Germany, for decades, had been trying to bring Russia closer by building pipelines that brought Russian natural gas to the country. It helped fuel the industrial powerhouse for years and helped keep the German economy bubbling. But once Russia launched its full-scale invasion of Ukraine and Western sanctions shut off the West from many Russian fossil fuels, Germany faced an energy crisis. Now, this was a big wake-up call for the government. Combine that with the simmering climate crisis, and it's clear that the government feels it needs to do more to become more self-sufficient.
And I wonder if all of this is affecting investor sentiment, especially when it comes to technology stocks, the market.
Asian share markets were mostly weaker, but the dollar strode higher. This comes as investors digested weaker Chinese trade data. But Tokyo stocks closed higher, helped by a cheaper yen and overnight gains on Wall Street ahead of U.S. and Chinese inflation data due out this week. In Europe, markets fell at the start of trading today. London's FTSE 100 index fell 0.2%. Meanwhile, in the Eurozone, the Frankfurt DAX shed a 0.5 point at the opening, while the Paris CAC fell 0.4%.
All right, Cassandra, thank you so much. And we wish you guys the best in that transformation technology plan that you are into. Okay, now staying with the market, U.S. stock futures were all lower on Tuesday morning as Wall Street struggled to carry over the momentum from the previous session. Futures tied to the Dow Jones and industrial average ticked lower. We can see them all in red at this time. This is for the futures early this morning. That's for the United States, obviously, 0.53% at 35,367. S&P 500 is also in the red, about 0.5%, 4,514.50. While the technology, guys, we just talked about with Cassandra, follows suit, 0.51% in the red at 15,408.25. Well, bank shares expectedly in the United States fell. That's after they've been marked down there, after Moody's downgraded the credit rating on several banks, including M&T Bank and Pinnacle Financial. The credit agency also placed Bank of NY Mellon and State Street on review for a downgrade. Not a very good time for banks in the United States at this time. We go to Asia now, where markets were mixed on Tuesday as China's July trade came in lower than expected. Japan's Nikkei 225 was up there. That's the only green that I see at this time, 0.38%. At 32%, 377.29. The Kospi was on the flip side, 0.26%, 2,573.9. The Hang Seng Index also almost 2%. At 1.81% in the red. We look at other parts of the markets in Asia. Shanghai Composite follows that line, still in the red, 0.25%. But in Australia, it's a little bit of green there, 0.03% at 7,311.10. In the global oil space now, prices fell by 1% after data showed that China's import and export fell much more than expected in July, in yet another sign of a sluggish post-COVID rebound for the world's largest oil importer. Brent crude futures were down by $1. That's about 1.2% at $84.28 a barrel. U.S. West Texas Intermediate crude was also down almost $1.99. That is at $80.94. China's oil imports were down 10.29 million barrels per day in July, according to data, and that was down 18.8% from June, but still up 17% from a year ago. The country's overall imports dropped 12.4% and exports fell 14.5% from a year earlier, both steeper declines than expected. Analysts say that the peak season for construction and manufacturing activity starts in September, and gasoline consumption should benefit from the summer travel demand, with demand expected to decrease gradually after October. In the metals market, gold prices edged lower on Tuesday as the dollar regained some footing, with investors awaiting U.S. inflation numbers that is due on Wednesday tomorrow for clarity on whether more rate hikes are on the table. Spot gold was down 0.2% to $1,932.96 per ounce, while U.S. gold futures fell 0.1% to $1,967.60. The dollar strengthened against major currencies, making bullion more expensive for overseas buyers. Gold prices are down for a second straight session, mainly weighed by comments from Federal Governor Michelle Bowman that additional interest rate hikes will likely be needed in order to lower inflation to the U.S. Federal Reserve's 2% target. And still talking about gold, central banks around the world added a record amount of gold to their reserves in the first half of 2023 as they sought to protect their assets from inflation and geopolitical risks. According to data compiled by World Gold Council, net central bank gold purchases totaled 387 tons through the first 6 months of this year. And that's the highest first half total since the organization began compiling quarterly data in the year 2000. China's central bank was the biggest buyer, around 195 tons of gold to its reserve, followed by Singapore Central Bank, which added 75 tons. Turkey also followed. Meanwhile, turned to a net seller of gold in the first half of the year, selling 20 tons of gold, according to the report. Well, Danish Investment Bank said that bank, which specializes in online trading and investment, said that the record gold buying by central banks comes as inflation is rising around the world and as geopolitical tensions are increasing. Gold is seen as a safe haven asset in times of economic and political uncertainty. Let's take a break now. When we come back on Business Incorporated, we do have more stories for you, mostly from the African continent. Stay with us. It was Welcome back. Still watching Business Incorporated here on Channels Television. We head to the commodities space now. And what are we talking about today? We're talking about soybean. Its price peaked at 1,525 for a bushel in July, before declining by 8.52 to the current price at 1,395 per bushel. Well, what is responsible for this, and what are some of those important commodities which back here in Nigeria are connected to this soybean? We have joining us for this conversation Victoria Momo. She is an analyst with Financial Derivatives Company, joins us virtually. Hi, Victoria. Good afternoon.
Hi, Henny. Good afternoon. Thank you for having me.
So, soybean doesn't seem to be so popular in Nigeria, at least for, the first line of being consumed. But Nigeria is the second largest producer of soybean in sub-Saharan Africa. Once again, we're talking about area of potential. And then when we talk about exploring those potentials, we do have other story. How good or how deep are we in the area of exploring the potentials as the second largest producer of soybean at the sub-Saharan Africa?
So thank you very much for your question. I'll start by saying that soybean actually contributes 40% to the protein needs for feed production in Nigeria, and there is a growing demand for soybean in Nigeria, particularly in the livestock feed industry and poultry feed industry. So there is the demand for soybean. Even in terms of direct consumption of soybean, we also have increased demand for the product, because many people are beginning to find the usefulness of the product, because it's very, very rich in protein. At least it contains 40% of the protein needs for a human. And in terms of Nigeria being the second largest producer and still having a lag in terms of production, there are so many reasons that actually contribute to the low production level of soybean here in Nigeria, and one of which is low yields due to the high cost of seeds to grow soybean, as well as the scarcity of its superphosphate fertilizer, which is used to improve the yield of soybean in the country. And then there is the issue of the use of non-mechanized farming in producing soybean. It limits the yield that can be produced in that particular commodity. And then soybean is actually produced in the northern part of Nigeria, and it's no news that we have the issue of insecurity in this region. So it's affecting farmers' production of that particular commodity. And then if these issues are actually addressed, we could see more increase in the production of soybean, as well as if investments are directed towards the production of soybean, we could see more increase. For example, look at Ghana. Ghana actually has the ambition of becoming the top exporter of soybean in the next decade, and they are making conscious efforts to boost soybean production. For example, they have the initiative of planting for food and for jobs. They also have investment worth $108 million for soybean production, and then they've attracted investment from the government of Japan to boost soybean production. So there is potential in soybean production, and it's expected that Nigeria should look into it.
Yeah, but I wonder when we will get to exploring those potentials that we have once again. And, it could also serve as a good way of boosting our exports and increase our FX supply. But are we ready for exports of soybean?
Of course, we have the potential. Like I said earlier, we have the states here in Nigeria where soybean can be grown, particularly in the northern side. We have the potential to export. But then again, before we think of exporting to get foreign exchange, we need to satisfy our domestic demand. There is increasing demand for soybean in Nigeria, like I said, for the feed production, even for direct consumption. Industries are now going into the production of soy oil, which people now prefer. There is that demand for it, and it's expected that production, should improve in order to meet the demand. And when domestic demand has been met to some extent, we can now think of exporting it in order to earn foreign exchange, since that is exactly what we are all vying for. But of course, we have other commodities which we can also explore in order to earn foreign exchange in the country.
And as you said, it's becoming popular among Nigerians, the demand. I mean, apart from the feed, I know about the oil, at least it's said to be healthier compared to some other oil that is in circulation in the country.
Like you rightly said, it's regarded as the heart-friendly oil because it has low cholesterol, low fat level. And I mean, with the increasing rate of urbanization and increasing rate of health awareness in Nigeria, we've seen more people, being cautious about the kind of oil that they consume. And also, even because of that health consciousness, we've also seen the increasing demand for soybean oil. And this also presents opportunities for industries to, venture into soybean oil, and the industrial adoption of soybean oil basically is in processing soybean oil basically in order to get more money and also meet the demand for the oil. And then once there is an increase in demand for soybean by this industry to make oil, we can see the soybean market in Nigeria actually booming because that is an incentive to produce more and also make more money.
All right, thank you so much, Victoria Momo, analyst with Financial Derivatives Company. Thank you for your thoughts this afternoon.
Thank you for having me.
We move over to Egypt, where the Chief Executive Officer of the General Authority for Investment and Free Zones, Mr. Hossam Haber, has announced intentions to establish a fund to support Egypt's automobile industry, which is expected to revitalize the country's automotive sector. According to him, the signing of 3 memorandum of understanding with some of the world's biggest automakers indicates a commitment to localize the industry within Egyptian boundaries. Haber explains that efforts are focused on bolstering the production capacities of the automobile E-related industry in Egypt, with significant Japanese and Tunisian investment in the pivotal sector. The ongoing growth of the automotive industry is expected to boost economic resilience and offer numerous job opportunities, maintaining Egypt's status as a competitive player in the global automotive arena. In Ethiopia now, Ethiopia's National Information and Security Service has said that it has arrested over 3,000 suspects just 2 days after the government declared a state of emergency in Amhara region. Detainees are suspected of illegally circulation of money and corruption, according to a statement. The news follows the declaration of the state of emergency by the Ethiopian government to disarm the armed group in the region known as Fano, which the government considers as an informal armed group and threat to the federal government. And now we go to Ghana, where the government, through the Ghana Enterprises Agency, has commenced its disbursement of 35 million Ghanaian cedi in grants to some 270 selected micro, small and medium enterprises under the technical assistance and grant programs of the Ghana Economic Transformation Program. The grants will enable beneficiaries to fund various projects ranging from the purchase of machinery and equipment to working capital and last-mile infrastructure investment. Speaking at the grant signing ceremony in Accra, the country's capital, the Minister of Trade and Industry, Kobina Tahiru Mohammed, notes that the initiative forms part of the government's effort to strengthen local businesses and position them as viable entities for economic growth and transformation. He further notes that the program is in line with the Trade Ministry's efforts to develop SMEs so they can become drivers of growth. On her part, the Chief Executive Officer of GEA, Kosi Yanke Aye, highlights that over 65 million cedis had been committed and disbursed to about 800 MSMEs between September 2021 and January 2023. And South Africa's Minister of Trade and Industry, Ibrahim Patel, acknowledges that the United States has raised concerns about South Africa's affiliations with Russia in light of the ongoing conflicts in Ukraine. These discussions took place in the context of exploring the potential extension of the African Growth and Opportunity Act, that's AGOA. Minister Patel and Minister of Finance Enoch engaged in talks concerning the existing trade agreement between the two nations. And these dialogues come at a time when there are concerns that South Africa might lose the advantages afforded by the trade program due to its perceived association with Russia and its stance regarding Russia's actions in Ukraine. In response, South Africa has formally requested that the United States reconsider an early extension of AGOA, which is set to expire in 2025.
And to go into the construction of both wind and solar plants. In respect of solar plants, there has been a proposal put to government that one element of the solar plant, namely the solar PV module, should be more flexibly designated. Now, the PV module consists of the cells that basically transform the ray of the sun into electrical energy. There's currently two producers of these modules in South Africa. The one is based in eThekwini, it's it's Art Solar, and the second one is based in Buffalo City, it's Seraphim. I'm advised that these two firms together have invested about R750 million in building local capacity for the new program that government has announced.
And that is South Africa's Minister of Trade and Industry, Mr. Ibrahim Patel, talking about some of those agreements with the United States. And that's where we draw the curtains on Business Incorporated for today. Thank you so much for being a part of it. We have another package waiting for you tomorrow. But first, I'll see you in the morning, 10 a.m., bright and early, business morning. Until then, do take care of you.